Hi, good morning or good afternoon, everyone, depending on which part of the world you are watching this from. This is Janice. I'm an ESG reporter for the Business Times. It's a financial newspaper based out of Singapore. I would be moderating today's event organized by Positive Money. It's basically to mark the launch of the organization's first Green Central Banking Scorecard for the Asia region, specifically East and Southeast Asia, otherwise known as ASEAN Plus 3. So, for those who are not familiar, Positive Money is an organization working to redesign the global economic system for social justice and a livable planet. So, this first report focused on Asia is modeled after similar ones that were previously done on G20 countries, where their green policies adopted by their green central or by their central banks were being ranked. And I believe the third edition was published last September. So joining me today at this launch would be Joe Herbert. He's a senior researcher at Positive Money, who will be introducing the report. After his introduction, I'll be joined by a panel of experts. Dr. Ma Jun, who is president of the Institute of Finance and Sustainability, also former chief economist at PBOC's Research Bureau. Dr. Heru Haradian, he's deputy director at the Department of Inclusive and Green Economy and Finance at Bank Indonesia. Ms. Siti Kholifatu Rizkia, who leads WWF's Sustainable Financial Regulations and Central Bank Activities Assessment. Mr. Aziz Durrani, who leads the Technical Assistance Function at the ASEAN Plus 3 Macroeconomic Research Office, as well as Ms. Laura Canas de Costa. She is a global policy co-lead at the United Nations Environment Programme Finance Initiative, and she will also be sharing key messages from another report recently published about climate-related risks in Asia Pacific. Just some housekeeping matters. There will be time allocated for members of the audience to ask questions later. You can do so through the Q&A function on Zoom. Please also note that we will be recording this session and it will be made available on public platforms after the session is over. Yeah, Joe, over to you.
Thanks a lot, Janice. And to everyone, welcome. Thank you for joining. For those who aren't familiar, Positive Money is a non-profit organization based in the UK that conducts research, policy advocacy, and public campaigns aimed at redesigning monetary and financial systems to build a just and sustainable economy. And as Janice said, I'm a senior researcher at Positive Money and a co-author of this new East and Southeast Asia Green Central Banking Scorecard, along with two of my colleagues. And the report builds on the success of our previous G20 Green Central Banking Scorecard series. As Janice said, the third edition of that was published last year. And this new East and Southeast Asia Green Central Banking Scorecard is our first report focused solely on Asia, which is obviously one of the most crucial regions in the global fight against climate and ecological breakdown, with rapidly expanding economies and major climate investment needs. The report analyzes and scores the 13 countries of the ASEAN plus 3 based on their central banks and financial supervisors' progress in aligning their policies with addressing the ecological crisis. And the ASEAN plus 3 includes the 10 member states of the Association of Southeast Asian Nations, so Brunei, Cambodia, Indonesia, Laos, Malaysia, Myanmar, Philippines, Singapore, Thailand, and Vietnam, and the 3 major East Asian economies of China, Japan, and Republic of Korea. So to give you a little idea of the layout of the report, we begin by discussing green finance developments at the ASEAN and ASEAN plus 3 collaborative levels, before moving on to the core of the report, which is the country by country analysis of central banks and financial supervisors' green policies. And then the report finishes by highlighting some important next steps for the development of green central banking in the region. The report assesses the actions of central banks and financial supervisors across 4 categories. So we look at what we call research and advocacy work, and then monetary policy, financial regulation policy, and a 4th category that we call leading by example. And this contains other kinds of actions that show leadership on environmental issues. We collected the data on the policies through literature reviews, expert consultations, and direct communications with the institution studied. And as with our G20 scorecards, we award policies different number of points according to 2 variables. So firstly, their impact level, which we define by the extent to which a policy is likely to divert finance away from ecologically destructive sectors, notably fossil fuels, and towards sectors central to green transition, such as renewable energy and others. And secondly, we score policies according to implementation level. So whether a policy is just under discussion, subject to a formal or has been fully implemented. However, our analysis of each country's progress in the report does not just draw on this scoring framework, but also considers the widely varying characteristics of each country and the different political and economic contexts they are operating within. So to move on to an overview of what we find in the report, green central banking in the region, we find has much space to develop, with even the top scoring country, China, half the maximum points available in our framework. However, crucially, the level of development across the different countries in terms of policies varies dramatically, which in large part reflects the vast economic and institutional disparities between the 13 countries of the ASEAN +3. So after scoring each country's policies, it was notable that this revealed a significant divergence within the ASEAN +3. And we found one cluster of highest scoring countries, including China, Malaysia, Singapore, Indonesia, the Philippines, and Japan. And notably, this cluster contains many of the largest economies in the region. Several of these strongest performers also exhibited different forms of close coordination between central bank and national government, which is something notable for other central banks elsewhere. And the second distinct cluster, including Vietnam, Cambodia, Laos, Brunei, and Myanmar, gained significantly lower scores, indicating that they are at much earlier stages of exploring green central banking policies. And of course, this group includes countries with lower GDP and/or GDP per capita that are facing significant constraints, including legacies of colonialization and marginalization within the unequal international monetary and financial system. The 2 remaining countries, Thailand and Republic of Korea, gained scores which place them in the middle of these 2 clusters. So the level of development of green central banking policies across the ASEAN +3 we found reflects wider inequalities in the region. We should expect central banks and financial supervisors in countries with greater economic power and larger historical contributions to environmental degradation to be showing stronger leadership in developing green central banking policies. And this correlation is visible to a significant extent in our analysis. However, there are some outliers, with countries like Japan and Korea placing lower than several of the Southeast Asian nations with smaller economic capacities and historical emissions in them. One second. So clearly, in the cluster of lower scoring countries, there are significant constraints which are limiting institutional capacities to develop green central banking policies. And these countries, we believe, therefore, should receive greater support to develop their green central banking policies from those with larger capacities, both within the region and beyond. Because without this, the disparity highlighted in the report may continue, with some countries being left behind while others strengthen their policies, contributing to an uneven regional green transition. So I'm aware this has only been a very brief report, but this launch event will build your interest to go and read the full thing. And please get in touch if you have questions or would like to discuss the report further. So I'm very happy that we managed to bring together a fantastic lineup of expert speakers, and I'm really looking forward to now hearing from them, their perspectives on the development of green central banking in the ASEAN Plus 3, and any reflections on the scorecard and how it connects to their work. So hand back to Janice to introduce the first speaker. Thank you. You're on mute, Janice.
Apologies. Yeah, I didn't realize. Thanks, Joe, for summarizing the report. Now I would like to invite each of the panelists to provide some introductory remarks. Maybe we could start off with Dr. Heru, please.
Thank you, Janice. Can you hear me?
Yes.
Thank you. Let me greet the panelists first. Mr. Aziz Durani from AMRO, Miss Siti Khalifatul Rizkia from WWF Malaysia, Miss Laura Canas da Costa from UNFFI, and you, Janice, distinguished guests from ASEAN Plus 3, esteemed colleagues, ladies and gentlemen. Good afternoon from Jakarta, and a very good morning to our colleagues in the United Kingdom. First of all, on behalf of Bank Indonesia, I'm honored to be part of today's launch of the East and Southeast Asia Green Central Banking Scorecard 2025. I would like to thank Positive Money for producing this valuable report. It not only measures our collective progress in ASEAN Plus 3, but also reminds us that central banks are no longer just guardians of price stability. We now also play a key role in addressing climate and environmental risks that affect long-term economic resilience. Distinguished participants, central banks are among the most powerful financial institutions. Our decisions shape credit, investment, stability. We can either speed up or slow down the transition to sustainability. The ASEAN Plus 3 region makes up more than a quarter of global GDP. It is highly dependent on fossil fuels and very vulnerable to climate risk. The choices we make here will strongly influence whether the world succeeds or fails in addressing climate change. This scorecard is not just a report. It is a benchmark of progress, a spotlight on the gaps, and a call to urgent actions. Bank Indonesia has taken steps to embed sustainability in its work. Allow me to highlight several achievements. In monetary and financial policy area, we have some initiatives. First, through the macroprudential liquidity incentive policy, we provide reserve requirement reduction worth up to 35 trillion rupiah for banks financing eco-friendly housing and electric vehicles. Second, we also have linked inclusive finance with sustainability. Our inclusive financing ratio requirement now counts green bond, sustainable sukuk, and blended finance platform to meet the requirement. In monetary operation, BI invests in Indonesian sovereign green sukuk and has launched BI on green sukuk up to 2 trillion rupiah. We also apply a sustainable and responsible investment framework in our international reserve, including $7 billion in global sustainable bonds and participate in the BSIP G3 Green Fund. We also made significant effort to build sustainable finance infrastructure. This includes launching a sustainable taxonomy, introducing sustainability disclosure standard, and developing our own carbon calculator. In the real sector area, we also have several initiatives regarding SMEs. Recognizing that Indonesia's economy rests on millions of small and medium enterprises, BI has pioneered the Green SME program. This supports SMEs to evolve into green SMEs. In doing so, we provide technical assistance from carbon emission reporting to green business development to help SMEs become bankable as green businesses. In addition, we also connect green SMEs not only to banks, but also to buyers through expos, trade fairs, business matching events, ensuring financing translates into real market opportunities. Lastly, we also transform ourselves into green institution. Currently, BI is developing climate stress testing methodology for our own balance sheet. We also have adopted green framework for our own operation. For example, our currency circulation is fully aligned with sustainability practices from raw materials, printing, distribution, and waste management, all green. We also design green office standard and start using electric vehicle in our own operation. Last year, in 2024, we created a dedicated green department and made green training mandatory for all staff. Esteemed guests, while progress is real, challenges remain. At least there are 3 challenges in my perspective. First, data availability. Reliable climate-related financial data is still limited. BI is developing the green calculator and supporting IFRS-aligned sustainability standard, but more work is needed. Second, market readiness. Many financial institutions still see green projects as riskier or less profitable. We need more successful demonstration projects to prove their viability. Third, balancing central bank mandates. As a central bank, our first duty is stability, but we must also integrate climate carefully. Indonesia still depends on carbon-intensive sectors. A transition that is too fast risks instability, but too slow risks climate vulnerability. In addressing the challenges, a collaboration is a must. In this sense, Bank Indonesia actively works with ministries and local governments to support Indonesia's net zero 2060 goal. We believe financial stability and environmental sustainability go hand in hand. Within ASEAN+3, solidarity is essential. We urge that countries with greater capacity must support those more vulnerability, so that no one is left behind. Ladies and gentlemen, today's scorecard is not the end. It is a starting point. It guides us to strengthen cooperation, raise our ambition, and make finance a driver of sustainability. On behalf of Bank Indonesia, once again, I congratulate Positive Money and Green Central Banking for this initiative. We affirm our commitment to advancing green central banking in ASEAN+3. Let us work together so that our financial system safeguards not just growth, but also our planet and future generation. Thank you.
Thank you, Dr. Heru. Next, maybe could we have Ms. Siti Khalifatul Rizkia to make her introductory remarks, please? Thank you.
Thank you so much. Thank you for the opportunity. We from WWF really welcome the stocktake of report on sustainable financial regulations in ASEAN. We think that it's a very valuable exercise because it does not only help us to see how far the individual countries have come, but it also it allow us to see where the gaps are, and then from there we can collectively raise the ambition across the region. And in WWF, we also have a similar annual assessment, which I'm leading. It's also a sustainable financial regulation with a slightly different methodology, but it serves a similar purpose. And just sharing a little bit from what we have observed so far from ASEAN, we see that most central banks and regulators have actually issued some form of sustainable financial supervisory expectation. But I have to give some disclaimer. This does not include a few countries like Laos, Cambodia, because we do not cover those countries. So in my explanation, I will not cover those countries. And in some countries are very specific on targeting climate risk, like Korea, Japan, and Malaysia. And some other countries like Thailand, Indonesia, Philippines, and China, for example, they include broader environmental factors and package them as under the umbrella of sustainability. But in our observation, Asia-Pacific is actually among the more progressive regions. We are ahead of some other regions, especially if we consider the Global South countries. So we are getting there. And one area of progress that I think might be very noticeable is that many countries and regulators in the region are now starting to develop the green taxonomies. So you'll see and notice countries like China, Philippines, Malaysia, Indonesia as well. But what's still missing from our observation is the mandatory disclosure against these taxonomies. So we already have the tools, but the regulators have not mandated disclosure against the green asset ratios, for example. So we see development in some areas, which is very commendable. But of course, there are still next steps that we need to look into it, because that's where more impact are expected. And on macroprudential, for example, as Bapak Heru mentioned, there are a number of incentives that some countries have initiated, like Bank Indonesia with the reduction of reserve requirements. And then in Philippines, they also came up with similar incentives. One thing I need to mention is that incentives are really important, but we also need the stick. So because if it's only carrots, you end up just feeding the horse without actually steering it. So in our review, market discipline has to be there to make sure that everyone is moving in the right direction, also at the right speed. So it also means that we have to embed climate and environmental risk into a whole lot of supervision tools. So it's not just incentive, but making use of the whole supervision tools to make sure everyone is moving on the right direction. I'll probably pause here, but I'll be happy to sharing more of some of our observations and the progress that we have seen so far in the region. Thank you.
Thank you, Siti. Next, could we have Mr. Aziz Durrani, please?
Hi, good day, everyone. Janice, can you hear me okay? Yeah, perfect. Okay, thank you very much for inviting me here, and it's great to hear the former speakers and the introduction from Joe as well. Perhaps I can just start by giving a quick little summary of what AMRO does and its involvement in these kind of issues. So AMRO was actually set up after the last Asian crisis towards the end of the 90s. And at that time, it was to provide an emergency liquidity support facility in case any of the Asian countries ever fall into that kind of thing. So we have a $250 billion facility for that. But it then evolved into a macroeconomic surveillance organization, so going out to each of the countries and region-wide to assess the risks, right? Because what we wanted to do is try and spot the risks before they actually crystallize, and rather than going into a crisis. And then further on from that, my particular role is on providing technical assistance, which is basically spotting the issues and then providing help to mitigate against them. And so really, climate risk really falls in across the whole gamut of those areas, because as we're increasingly seeing these kind of climate events, biodiversity loss and so on, can create major impact for economies in the ASEAN +3. And that's what we're also picking up when we're going on doing our surveillance. And so we want to try and educate as much as possible and change the policies and support the new kind of policy development to mitigate some of this and avoid that financial stability impact. So that's really kind of the bit of a background to what AMRO does. And certainly, Joe, I think the report is very, very timely, and I think it's picking up on a lot of issues. And like anything, I think there's always more to be done, and we're always pushing for more to be done, right? So that's not going to end. But I think it's useful to also recognize where we have got to. And I think, as a couple of the earlier speakers were pointing out, there is a lot of positive things happening in the region. A lot of the central banks actually have integrated climate risk assessments, climate risk stress testing, nature-related risk and reviews and so on, which is a very positive, kind of trajectory. But I think we also should appreciate, as was made the point that was made earlier, that we're also needing to combine GDP and growth for this region, right? It's not the common criticism that's been made is, okay, Europe, for example, you've already industrialized, you've got to a certain level, and therefore it's easier for you to stop your coal usage and so on, whereas we're still having to do that growth. So where I think the real key impact we can make is to integrate those two things and make it in the transition to a lower carbon economy in a sustainable way that can also support jobs. So in terms of the carrots and the sticks that Siti was pointing out to earlier, we also want to look at the opportunities in the green economy, how we can support those industries, and so bring that together. So, just quickly maybe summarizing some of the issues around barriers for this region and where they could impact us is I think it's really important for ASEAN plus 3 countries to be properly aligned and work together, because otherwise what you have is some countries that are moving forward and implementing stronger green policies and regulations. You'll then see an arbitrage where companies and institutions move to markets which are more weakly regulated, and you're kind of just pushing that issue. And of course, the pollution and so on is still going to be affecting your economy. So I think there's definitely a role for the region as a whole to work together, and that's we have things like the ASEAN taxonomy and things like that which are bringing us closer together. And so I think a large part of that is things like this on capacity development, helping these reports, and then saying, well, what are the new regulations that we should be implementing, and so on, and working together on that. And then finally, as I said, we want to continue moving forward. So I think a lot of good things have been done in terms of policies being implemented and being there. But now the next step is for them to actually take effect. So if you're coming out at the bottom of a climate stress test, there should be some impact on you in terms of a regulatory add-on or some impact like that, to ensure that you're moving correctly in the right direction. Otherwise, people just tend to ignore it. So that's one thing. And the second thing, I think, obviously, the kind of current global climate, we've seen, obviously, the US take a big step back. Europe also slightly not moving as forward as we wanted. It's a good opportunity, I think, for ASEAN plus 3 countries to step forward and say, well, it's time for us to set a little bit of the debate and the agenda. We still want to progress with this, because obviously we're seeing climate impacts across countries here. So we want to do something, but we want to do it in a way that's sustainable for us and allows us to continue on the growth trajectory. So I think that's an opportunity looking forward as well. So let me pause there and hand it back to Janice, and happy to take questions later as well.
Thanks, Aziz. Could we have Dr. Ma join us now to give his introductory remarks?
Yes, I'm here.
Hi, Dr. Ma.
Thank you, Janice.
Thank you. Thanks for joining us.
How much time you wanted me to spend on the opening?
I think 5 to 10 minutes.
Great. Well, thank you very much for inviting me to join this discussion on central banking and green finance. Now, I started 11 years ago as chief economist in the Chinese Central Bank, PBOC. At that time, I was leading the green finance policy design. And 2015-16, we were developing a framework, which is called the Green Finance Guideline, consolidating 7 different ministries' policy tools. And this exercise was led by the PBOC. And 2016, China published the Green Finance Guideline, which I view as the first top-down framework for green finance. Of course, many other countries have done green finance a long time ago, especially Europe, 20 plus years ago. But most of these in earlier days were bottoms-up initiative. And China in 2015-16 began to develop a framework which includes key elements of what today believe as necessary. For example, taxonomy, disclosure requirements, different products and the policy incentives. Now, under this framework, which officially was announced 2016, as of now, 9 years after, China has developed the largest green lending market with outstanding green loans at 45 trillion RMB, which is equivalent to $6 trillion US. That's outstanding. Has not accounted for those green loans extended a few years ago and repaid already. And also, we developed the largest green bond market with outstanding green bonds at 2.3 trillion RMB. So where did this money in all these instruments go in terms of supporting real economy activities? Just give you a few examples of where it went. Number one, renewable energy. And as a result of the massive green financing deployment, last year, the newly installed renewable capacity in China was 60% of a global total. And also it went to green transportation. Last year, Chinese EV production was 60% of global total. And now Chinese batteries, which are feeding into the renewables and the green transportation system, represents about 70 to 80% of global total. And all these assets in the real economy actually are very similar to traditional energy assets or real estate assets. They have a yield, which may be 7, 8%. And if your funding cost is lower, then these sectors become very attractive for private sector financing. And the green finance, in my view, is simply generating more accessibility and to low-cost funding. And that's what we did in China. Now, in terms of the key ingredients within the green financial system, I think there are 4 elements. Number one is taxonomy. And our experience that taxonomy has to be done at the regulatory level. We don't want 100 taxonomy coming from the NGOs and associations and private sector players. Everybody label green according to their standard. This is leading to greenwashing and a lot of costs for verification. So China started the taxonomy officially, and we managed to require every bank to use it. Yeah, on a mandatory basis, 4,000 banks adopted taxonomy immediately after the central bank published the taxonomy. And that adoption has a lot of benefits. For example, you can compare the green loan ratio across the banks, because every bank have to report green loan outstanding amount growth based on taxonomy. Then you know which bank has, let's say, 34% of green loan ratio, which is the amount of green loan as percent of total outstanding loan, and which bank has 15%, which is average in China, and which bank only have 5%. And by putting these numbers together and ranking them, it becomes a huge incentive for many banks, especially the banks with lower number, and they will be questioning themselves, why I'm so low, and should I change the management, or should I change the department heads of the green finance, right? So that's the beauty of adopting, mandatory adopting taxonomy on the banking level. And the second usage of that, which linked to my other pillar, is the incentive. In China, we're putting some incentive. For example, central bank provides the decarbonization facility, which is a low-cost funding facility through commercial bank to support green projects such as renewable. And that incentive is partially based on taxonomy, because supporting some activities which are subset of taxonomy. So without taxonomy, you cannot recognize who should be subsidized by these cheaper funding mechanism. And also local governments in China, they provide interest subsidies, also based on taxonomy. For those qualified labeled green loans, they get interest subsidy in some cities like Huzhou. And these are the incentive which drive some jurisdictions very, very rapid green loan growth. For example, Huzhou, which is a pilot city that uses a subsidy on green labeled loans, has seen growth of green loan at 40% every year over the last 7 years. And now its green loan ratio is 34% for the entire city in the city's banking system. Versus, I think the emerging market average green loan ratio is 3%. Yeah. And now the other key pillar is the disclosure requirement. Again, once we put out disclosure requirement, asking all banks and all the borrowers to report environmental benefits. We did this on a mandatory basis. Every company receiving green loan have to report how much carbon you reduce, how much energy you save, how much air pollution you reduce, and so on. And then the banks have to report to the central bank, and the central bank will check the accuracy of these numbers. And this is transparency, which really connects the money with the right projects. Yeah, of course, we're now moving towards ISSB-based disclosure system, which cover not only project level, but also corporate level disclosure. And the other pillar is the financial products. We have now developed the largest green lending market, green loan market. We also have 1,000 green equity funds and a lot of other products like green insurance, green ETF, green ABS, and so on and so forth. But in many of these product areas, the central bank has to do something. For example, on the green bond, you need to have a regulation from the central bank on who is qualified to issue green bonds, and what is the green bond definition, and how the third-party verification should be done for green bond issuance, and so on and so forth. So creating an ecosystem for particular product market is a job, at least in some cases, of the central bank. So that's my short summary of what China has done, especially from a central banking perspective, to create an ecosystem and boost the market activity on green side.
Thanks, Dr. Ma. Over to you, Laura.
Thanks so much, Janice. Let me know if you can't hear me. Very challenging to add much value after this amazing lineup of speakers. Thanks so much. So yeah, my name is Laura Canasta Costa. I co-lead the global policy team at UNEP-FI. For those less familiar, UNEP-FI is a partnership essentially between the United Nations and the global finance industry. We have about 400 member banks and insurance companies as members. And what my team's focus is on the one hand, supporting those member banks and insurers as they navigate this increasingly complex environment that we're discussing today. And at the same time, we also support central banks and supervisors themselves directly through technical assistance mandates as they integrate some of the measures that we're talking about today. So I also wanted to start out by just congratulating the authors and the partners behind the Green Central Banking Scorecard. I think it's a hugely valuable tool that really sets out clear, transparent benchmarking and ambition across central banks. I want to add a little bit by providing a kind of X-ray behind the scorecard on the financial policy dimension. So a few months ago, we published a paper looking at in detail at how APAC regulators and supervisors are actually integrating climate risk across their prudential frameworks. So through their mandates, through microprudential and macroprudential tools. And so while the scorecard goes country by country, we used a slightly different lens. So we used the Basel Committee's 3-pillar framework as the kind of organizing lens. So we started by looking at mandates, then looked at Pillar 1, minimum capital and liquidity requirements, Pillar 2, dealing with supervisory review and banks' own risk management, and then Pillar 3, focusing on disclosure. So I'll just take a couple of minutes to walk through our key findings, and I think some of the overall messages align really well with the scorecard as well. Just at the start, I think this has come up already a couple of times, but why I think the Asia Pacific region really sits at the epicenter of climate and financial risk. Just to recall some of these numbers, 60% of the world's population, almost half of global GDP at this point, also 60% of global greenhouse gas emissions, and almost 70% of the world's vulnerable population. So Asia Pacific is not just an economic powerhouse, but it's also uniquely vulnerable to the impacts of climate change and biodiversity loss. So the combination here of exposure, of economic weight, and emissions makes the region a driver of climate outcomes and also quite vulnerable. And this translates, if we look at the role of supervisors in central banks, into a real complex challenge of, on the one hand, safeguarding stability, and at the same time, as we've already heard, playing an active role in preparing their respective financial systems for a just transition. So firstly, let's look at mandates. Traditionally, central bank mandates focus on price and financial stability, but as Dr. Hiro already said, they're no longer guardians of financial stability. We're seeing a really interesting evolution that's taking place. Malaysia, the Philippines, Singapore, Indonesia, New Zealand, implicitly or even explicitly now including sustainability considerations into their core central bank mandates. Why that matters? Well, whether sustainability is explicit in the mandate does not automatically mean or determine the speed of action. So we do see in Europe that central banks like the ECB, the Bank of England, the Banque de France, they have also taken very active steps without having such explicit mandates. But having an explicit mandate can provide just the kind of clarity and political cover and direction for supervisors to act really decisively. So moving on to the macro prudential toolbox, even though the progress here is not necessarily even across the region, as I think the scorecard also highlights quite nicely, we do see that climate scenario analysis and stress testing are really moving from the piloting phase to becoming full-fledged frameworks in various jurisdictions. And just to name a few, the Monetary Authority of Singapore now runs annual industry-wide stress tests. Hong Kong has expanded its tests to cover a larger share of the banking sector. Bank of Korea jointly tested climate risks. And Bank Negara Malaysia as well has rolled out quite detailed guidance and requires banks to conduct climate stress testing. And at the same time, we see many other jurisdictions, India, Indonesia, Thailand, that are also developing these frameworks. I think the clear capacity, the clear challenge here, and I'm sure we'll touch more on this as well, is capacity. So better modeling, better data, and also better tailoring of the NGFS scenarios to local contexts. So that was the macroprudential side. On the microprudential side, I think very, very briefly, going through the pillars. Pillar 1, our analysis showed that none of the APAC jurisdictions we covered had yet adjusted capital requirements formally for climate risks. So the discussions are very much ongoing. But yeah, given the data gaps, it would probably be premature to do that at this point, and that's also completely in line with developments in other major regions like Europe and elsewhere. On pillar 2 and pillar 3 is where we saw the most tangible progress and most rapid developments. So many supervisors now issue risk management guidance and require their banks to integrate climate into governance, strategy, and risk frameworks. And Singapore is, of course, a very early example here. The environmental risk management guidelines that came out in 2020, but similarly, Malaysia, climate risk management guidance, and many others. And the common thread here, I think, is the move from voluntary to mandatory approaches. So we see increasingly that supervisors are starting to set deadlines for banks to conduct these climate stress tests. And on pillar 3 as well, disclosure requirements, or I guess, yeah, prudential disclosure requirements, I should say, because we didn't look so much at the corporate side, but really the pillar 3 requirements, and they're evolving pretty rapidly as well. Again, moving from voluntary practice towards a more hard rules. Hong Kong, Malaysia, Singapore, New Zealand already require prudential climate disclosures, and many others are developing their frameworks. Where, yeah, on the corporate disclosure side, almost 70% of the regulators in Asia are now planning to mandate disclosures by 2025, increasingly aligned with TCFD and ISSB. So to conclude the introduction, I think just to say that prudential regulation, it's no longer so much about whether to integrate climate, it's really more about how to do that, and especially with a view to approaches that are effective, that are also proportionate, and that are consistent across the region, I think is key. The scorecard shows us where central banks and APAC need to go. And I hope that, yeah, our analysis can help map how they're getting there and the steps that they've been taken. Sometimes fast, sometimes more measured, sometimes a bit uneven, but with real momentum. I think overall, clearly pointing in that direction. Okay, I'll stop right there.
Thanks, Laura. So Amy wanted to initially kick off the Q&A session by asking each panelist to briefly share your initial reflections on the scorecard. But I think we've heard bits and pieces from some of you already. So I think maybe we can just get down to it. So okay, my first question is for everyone. Feel free, to to chime in, and share your thoughts. So one thing that struck me about the report, right, was how none of the 13 countries being ranked, none of their monetary or financial policy measures were rated to have a high impact. Finance away from like fossil fuel production, the most ecologically damaging economic sectors. But given the context of Asia, right, we're talking about a region that is still hugely reliant on fossil fuels. Abundant coal reserve, still the most stable form of domestic energy source, relatively affordable, very important considering we are in a region where large segments of the population are still low income. How can we reconcile that? How can, central banks make that shift through policies to get capital away from fossil fuels, but yet, not causing major disruptions to the livelihood of everyday people? I think Park Heru said just now, right? Cannot be too fast, but cannot be too slow. So I just want to get everyone's thoughts on this. Yeah. Whoever is available, whoever is, who feels they have a very strong opinion on this. Yeah.
Now, I'm not sure if the scorecard has included some of the central banking instruments in the measuring. So sorry, I have not read the scorecard. For example, the two central banks in the world. One is the Chinese central bank, namely the PBOC, and the other one is the Central Bank of Hungary, introduced a monetary policy tool. The Chinese one, the full name is called Carbon Reduction Facility, and I call it Decarbonization Facility. And I think the amount of financing is leveraged is 1 trillion RMB. Yeah, if you count the amount of carbon reduction as a result of that, because it goes mainly to renewable energy, it's fairly sizable. Yeah, and I'm not sure if the scorecard take into account that instrument. And the Central Bank Hungary 2 years ago they introduced this capital relief program on green assets, which again is equivalent to a reduction of funding cost engineered by the central bank for green assets such as renewables and green mortgage and so on. Now, if for this small country, right, it's only 10 million people, and if you count the dollar amount of that facility in terms of total investment, it has leveraged by the capital relief program, and I think it could be quite sizable, yeah, in terms of carbon reduction.
Thanks, Dr. Ma. I think Park Heru, you raised your hand. You wanted to,
Yes.
yeah.
Okay. 2 years ago in Indonesia, we have a new law that authorized central bank to regulate and develop sustainable finance. So basically, the government in our long-term planning, national long-term planning, said that our growth will be reduced gradually unless we transition. And then that's why financial sector is one of critical element to support this sustainable growth in the future. So when you mentioned about fossil fuels, we in here not a fan of defining we need to step away from fossil fuel. I think the regulation should be neutral. So in this sense, we believe that we do not say that we need to step away from fossil fuel, but we need to say that the carbon intensity or carbon emission from power generation should be this number, gradually reduced. So we encourage new technology and so on. Maybe for coal, for example, you can use carbon capture and storage technology in the future. You can have research now. So we because in Indonesia we still depend on coal, right? So in our transition roadmap, we have our energy mix roadmap. We didn't step away from the coal, but we focus on how to reduce the carbon emissions from the power generation. So we reduce the use of coal, but the coal will be there, but then we will mix with the technology. Maybe in 10, 20 years, the coal will be combined with the new technology to capture the emission. This is the idea. This is why our taxonomy, our first taxonomy focus on carbon emission in energy sector, but we didn't say step away from the fossil fuel, but reduce the emission from the power generation gradually. This is not now because our target, the net zero, will be 2060. So you have time to reduce to net zero until 2060. Reduce it gradually, and then this we will provide incentive for that, so you can transition. If you cannot transition to net zero now, it's okay, but reduce it according to the roadmap. This is the idea here. Hopefully in 10, 20 years, when we close to our target to net zero, the new technology will be there, so we don't have to have a disorderly transition. This is the idea in Indonesia.
Okay, thanks, Pak Heru. Speaking of new technologies, I think Dr. Ma was talking about, how having a green finance framework is important because it's about channeling low-cost funding to green technologies or solutions that otherwise would have faced higher costs of capital, right? In my work as an ESG reporter focusing on Southeast Asia, the very common comment that I have always heard is that, investing in emerging markets such as Southeast Asia, there's a higher cost of capital. I'm interested to build my solar farm and my wind farm, but then, because of the perceived or real risks, I can't get the kind of higher rate of return that I would expect from, higher perceived or real risks, right? So, and there's a lot of talk about how policy can mitigate this. So I'm interested to hear, what do you think central banks in emerging markets in Asia can do, to mitigate this area of concern? Yeah. To facilitate more low-cost funding towards green solutions and technologies. Yeah. And anyone, open to anyone who would like to have a hand at this.
Janice, I thought I'd quickly jump in because I think your question is really topical in terms of, what are the action points, and these are some of the struggles that the kind of the real business on the streets are facing. And it happens actually just recently. Julia Bingler from the Council on Economic Policies and I wrote a paper on novel risks. It's actually a policy brief laying out exactly, trying to answer some of those questions you're asking, is what can central banks and supervisors do to help this? So I'd recommend, if people are interested in this, dig out the paper, and really we tried to make it easy to read. So just the first page summarizes all the actions, so you don't need to trawl through it. But it covers both sides of the argument, which is the steps that central banks can take if they want to be stricter on this in terms of increasing capital requirements. The kind of the things that Laura was talking about in terms of the Basel III, Pillar 1, Pillar 2, Pillar 3 actions, and so on. But then also on the other side, we are looking at how can central banks improve their kind of refinancing policies and so on to encourage more green lending. So you get a better rate if it's a green supporting kind of facility and that kind of thing, which creates a bigger market for having that finance. And so that should make it cheaper for these sort of people to be able to invest and get the funding for that. So there's quite a long list of actions. I think there's still quite a lot that we can do to support this. But at the same time, I take Pak Heru's point. We're not there to kind of say you have to stop using coal straight away, because that's not even going to happen. We know that's not. But there are a lot of technologies now, and I think Dr. Marjan, maybe he was going to also mention this later, but some of the technology in China is in these coal-fired power plants, they're stripping out more of the carbon. So there's a lot of advances that, okay, you still have to use it, but at least it's not going to be as polluting as potentially it could be. So, funding those kind of things from a financial sector would also be quite useful.
Yeah, if I can jump in, I see sort of 4 sets of measures and solutions to reduce funding costs, especially for emerging market. One is you need to have a clear definition of green activities by the regulator. Instead of having 100 different definitions of green, floating around, and everybody have to prove I am green in front of a whole bunch of different principles and frameworks and requirements and so on. So that itself, a single definition by regulator used on a mandatory basis, reduces cost because reduces recognition cost or labeling cost. And then disclosure requirements, you have to apply uniformly instead of everybody picking something to disclose, right? So that's a job of the central bank, other regulators, including Security Exchange and banking regulators and so on. The second thing is lots of options for incentive. We mentioned a couple of them, like the Chinese central bank, Hungarian central bank. They essentially offer low funding facility through their mechanism, whatever they call it, right? And give you cheap money. And the other thing is de-risking facility. Some local governments in China, they offered essentially guarantee facilities for green projects, which certainly reduce the perceived risk and therefore lower funding cost. And some actually offer subsidies directly from the local government pockets to reduce your funding cost. Now, the third batch essentially what I call the services. In China, we have the first round 8 cities in the green finance pilot. And the best one is Huzhou, which I often refer to. What they did is they built an e-platform matching green projects with green financing. So all the projects which are labeled according to taxonomy will be uploaded to the system. And then all the banks will come in to bid for these projects. This is like Uber taxi, right? Someone want to hire a taxi, you push a button saying I have a project, then all the bank will compete saying, I want your business. And the average time for matching one project with the financing is 1.5 days. Yeah. And instead of 3 months. And that save of time is actually save of money, right? For a lot of project owners. And this is, AI driven and all of these things. So in Huzhou, after the all these incentives plus the matching, and we estimated that the green financing is 20 basis points cheaper than non-green financing for the same project. Yeah. So it's not the other way around. That's why this place have seen like 40% annual growth of green lending. And now the last one is capacity building, because at the project level, a lot of project owners, actually, they are not equipped with the right resources to develop the company and projects which are bankable. And I would say 95% of the sort of initial proposals from small, medium enterprises to the banks on green financing are really not qualified. Yeah, and they are either missing the right people or the market or the capability of manage risks or the funding structure. So they have to be coached, and that's where capacity building is so important. And against that backdrop, my team in 2023 we launched a capacity building alliance of sustainable investment, which is called CASI. And we focused on capacity building for regulators, for banks, as well as for project owners. And the last 1.5 years, we trained 6,000 people in the sustainable finance field from 90 jurisdictions, which are largely developing countries. So I think that kind of a service needs to be expanded and need to be actually supported more by international organizations to scale their impact.
Thanks, Dr. Ma. Thanks, Aziz. Siti, I'd like to bring you in on the conversation. Dr. Ma mentioned a few incentives, but during your introductory remarks earlier, you said that carrots are important, but sticks as well. Could you kind of, elaborate, what do you mean by the importance of central banks introducing sticks beyond just carrots?
Yeah, thank you, Janice. I'll echo a little bit of what Aziz and Dr. Marcus mentioned previously. I think when I say carrot, when I said stick, it does not necessarily mean like a punishment or, that kind of thing, but it's essentially mean that we actually put the right pricing to the right risk, because now climate and environmental risks are very much underpriced. And when the industry are having the same standardized way of pricing this risk, it will naturally will move the lending and also the investment away from harmful activities towards a more sustainable activities. And we also understand that change will not look the same everywhere, because it will very much depends on each country's progress and capacity and also priorities, as Pak Heru mentioned as well. And different countries will also have different economic reliance to different sectors. That's something that we all agree on. But we should also remember that we all want to achieve the same goal. So we need to understand how do we collectively achieve this together. So some countries might need a different level of support. It might be in terms of financial, it might be in terms of technical capacity. And I believe that global South countries, those who are still very much trying to balance the economic development and prospering the society, will need a lot of technical and financial support of this area. But to add on the stick aspect that you mentioned, I truly believe that really following up on the supervisory expectations that you have rolled out is really important to make sure the pricing of risk there. So for example, I know that a lot of countries have issued those supervisory expectations, but have they said explicitly what will happen, and when is the goal of all these expectations to be met, and what will be the consequence of not meeting them? And there's a lot of other tools that need to be employed as well. For example, monitoring on the exposure to harmful activities. I know that like phasing out coal, for example, will not happen at the same time for all countries or all companies, but it will have to happen eventually. So there needs to be a really clear laid out plan by the regulators. What is the outlook in the next 5 to 10 years? And that's why there has to be a synchronization between the government and the regulators, including the central bank and financial sectors, because real change actually happen in the real economy. So when everyone having the same outlook, okay, so we're going to phase out these harmful activities in 2050, for example, and everyone will have the same vision and then starting to plan accordingly. I think one very notable example I would like to bring out is that end of last year, the Hong Kong Monetary Authority, they just announced that they will require banks to reach net zero, not just in the operations, but also in finance emissions by 2050. I don't think they have laid out more detailed explanation or expectation on this, but having this clear goal together as a whole financial sector actually helps the whole industry to know what's expected of them. And having target, of course, like it has to be followed up by a credible, transition plan, and then a monitoring from medium term and then the long term. It gives you a sense of accountability, and of course, it has to be followed up by the regulators and also by everyone in the industry on how are the financial institutions are planning to achieve this. But I think it's quite a good progress. And in my interaction with a lot of regulators, some might be a little bit, they put reservation on asking banks or financial institutions to put certain target because they don't want to intervene. But having this overarching goal, I think is really helpful to see the vision of the whole financial system in the country. Thank you.
Thank you. Thanks, Siti. You mentioned something about Hong Kong mandating banks to reach net zero, not just in operations but as well as financed emissions. This kind of reminds me of what Dr. Ma said earlier about mandating the adoption of taxonomy at the banking level in China, when they first rolled out the green finance financing framework. I'm just wondering though how 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 can such a policy be implemented in other markets? Because I'm imagining central banks generally would prefer to let their financial institutions take a more market-driven approach, to go about meeting their own setting their own net zero goals and developing their own decarbonization pathways. I'm just wondering, this balance between, mandating certain climate requirements versus letting the market drive it. How do we navigate this? Is there anyone who could um kind of any thoughts, to contribute on this issue? Yeah.
I can
I'm happy.
Oh, that's
Go ahead. Go ahead, Dr. Ma.
Sorry, I'd like to jump in on this subject of a mandatory adoption of taxonomy, because I've been talking to a lot of central banks, and so far they have developed taxonomy, but they decide not to use it on a mandatory basis. They say, hey, it's up to you, the bank. You decide whether you want to use it or not. And China is different. We started from day one after we have taxonomy. We say you have to use it. You report to me as a bank how much green loan you have extended, what is the outstanding balance, what is the environmental benefits you have generated on a regular basis to the central bank. Now, the difference is that a lot of other central banks think, oh, it may increase cost for the banks. And I need to ask the bank where you're willing to do the compliance, right? And then most of the banks say, no, it's difficult, it's costly, and that's why I decided not to use it. Yeah. So these taxonomy become useless because it's not used, right? And I'm saying that you should recognize the benefits of forcing banks to use it. One is that after you collect all the numbers, which they report, you can compare their green performance. If you don't have a number, no reporting, then you cannot compare, right? Compare what? Compare green loan ratio of all the banks. If one bank says, report number and shows a very high green loan ratio, and the other bank shows a very low green loan ratio, after you put them together, publish them, it becomes an incentive, very powerful incentive, right? The bank with lower ratio will ask themselves, why I'm so low, and they will ask the subordinates why you didn't do a job. Should I, replace you? And with some, other more capable people. So it doesn't cost the government a penny. Then it generates incentive for, stronger green initiative within the banking system. Without mandatory reporting on basis of taxonomy, you cannot do this, right? Then it's a benefit of allocating incentive. For example, you want to subsidize something which is green, then these green have to be reported based on taxonomy. So none of the follow-up can be done if you don't use it on a mandatory basis. And that benefits of usage on a mandatory basis reporting is much, much bigger than the very small cost of being compliant. The cost, I think it's like a 0.0 something% of the profits. Just adding a couple of people, few machine and so on and so forth. And it can be done actually a very low cost way because in China, there are technologies which are now doing automatic labeling against taxonomy with 95% precision. Yeah. So if you spend some money, spend some time, it's not very costly. But if you ask all the participants whether you want to do it, they definitely will say no.
Laura, you want to chime in?
Yes, maybe to just raise the flag for, I think it's not either or, voluntary and mandatory. Voluntary frameworks, I think, have been in various markets really instrumental first movers. So they allow some key front-running institutions to innovate, to experiment, and to kind of show what's possible. And I think, yeah, a lot of the advances in sustainable finance that we see, like disclosure, corporate disclosures, climate risk pilots, and to an extent also taxonomies have started as voluntary frameworks. I think this is very market dependent, and at the same time, voluntary initiatives in that sense also have their limitations. And so I think it's not an either or. Mandatory or more regulator-led initiatives are really key for leveling the playing field, and to create the kind of transparency and consistency. So we sometimes speak of them as a dance, right? Being mutually reinforcing. I think we need an element of both to drive this market and this whole trend forward.
Thanks, Laura. So we are moving on now to the audience Q&A session. Yeah, I'm sorry, I'm just kind of running through. Like, thanks everyone for contributing. There's a lot of questions. We have received a lot of questions. Okay, so maybe the first one to Aziz. So the question is, the biggest risk for everyone, including financial stability, is fossil fuels. Anything that has been done so far has not even bent the curve of fossil fuel growth, let alone shut them down. What new mechanisms and tools are on your radar that you think would have the muscle to start winding down fossil fuels quickly?
Yeah, I think
For
that's
Aziz, yeah.
Yeah, I think that's a good question. I mean, you know, if even if you look at the current history, for example, in Europe, who were very you know, advanced until quite recently in terms of cutting down fossil fuels, when the whole Russian situation happened, and the supplies got cut off, the German coal power plants came back online and started using them, right? So I think we cannot pretend that we have a very major dependence on this, and it's going to be very difficult to completely stop it. But as I was saying, what we're trying to do is incentivize the use of alternate, you know, moving to electric and so on. And Dr. Marjan was talking a lot about what China has done in that respect. And to be honest, it was slightly frustrating when I saw all these kind of tariffs from Europe and America coming on the Chinese goods. And the reason was they were saying, okay, well, China's kind of supported them, given unfair subsidies and so on. But at the end of the day, yes, they had given subsidies, but they were giving those subsidies to the whole world, right? By giving the products out, and it would have helped to transition to a lower carbon economy. So I think we need to stop looking, you know, we need to look at it more from a kind of global perspective and advance in that sort of respect. But at the same time, as I've said in the paper I was mentioning, the novel risk paper, we've given some guidance on the kind of actions that central banks can take in terms of their regulatory policies to sort of give some more add-ons to the kind of worst performing financial institutions or those lending to that side, and equally at the same time help the transition by providing more subsidies to green industries and products like that, and start making that shift that's happening. And I think in some ways, yes, there's still a lot of fossil fuel usage, but we are still moving quite quickly in certain countries to these new technologies. So I think it's definitely possible, but it's an uphill struggle given the current climate and where we are globally as well. So that makes it particularly more difficult for kind of the ASEAN region.
Thank you. Okay, I've got a few questions on coal. I'm going to combine them together. Pak Heru, there was an audience who disagreed with your point that central banks should not encourage a phase out of fossil fuels. So, yeah, the person is basically asking how can it not be a priority for central banks to transition away from fossil fuels? And then another related question is that however, coal phase out will inevitably lead to economic losses, which is the point, Pak Heru, that you raised earlier as well. So what is the most resilient way ahead? Would it be to nationalize the most emission-intensive assets? Or do you think we should just rely on the market and the private sector to price in the risk?
So thank you, Janice. I already answered in the Q&A form. So in my view, absolutely we agree that we need to phase down the fossil fuel. But I don't think it's a central bank function to set no fossil fuel. This is the government side, not the central bank. This is the idea. But we can help to phasing down by set a criteria for financing, for example, for to capital requirement and so on. So in our taxonomy for sustainable finance, we said that for power generation to be green, and then we encourage banks to finance the green one, it should be maximum 100 gram CO2 equivalent per kilowatt hours. This is the to be green. To be yellow for transition, we said that a maximum around 500, I forget, around 500 gram CO2 equivalent per kilowatt hours. And then we will reduce it gradually. And how to do it? Of course, we know that coal around 1,000 gram CO2. So it's coal not green, not yellow. Natural gas around 300. So natural gas can be yellow right now, but not green. So we have our roadmap to do that. And then we also concerned about the economic loss. So this is our, so we don't want to phase out the coal as fast as possible. No, it's not that idea. Our target net zero is 2060. So we look at the long side, 2060. So currently we don't have to be net zero. We need to reduce our carbon emission gradually. So our strategy is, for now, no more new coal-fired power plant. No new coal. But for the existing one, it's okay. But we know the power plant age normally around 25 years old. So the latest, the newest power plant, the coal-based power plant, will end its life around 2045 until 2050. So it will naturally will gradually phasing down itself because we don't have new coal-based power plant, and then the existing one, some will be old enough, and then we phasing out basically naturally. So after 2045, 2050, then we don't have coal, but not now. Currently, we still need coal. This is the idea. So we will phasing down the coal gradually, naturally. Thank you.
Thank you, Pak Heru. Dr. Ma. Sorry, I accidentally muted myself. Thanks, Pak Heru. Dr. Ma, there's a question for you. The green growth in China is astonishing. Unfortunately, the climate will only be positively impacted once fossil fuels are retired. Do you believe that the current transition finance mechanisms are enough to accomplish that job on the scale needed to keep the Paris Agreement, or do you think new mechanisms need to be in place to accomplish the phase out?
I think two trends are quite important. One is China is producing massively the renewable capacity and EVs and so on, right? That's a supply side of the green technology. But at the same time, we need to boost the demand side. If you only have supply, then you got oversupply, you cannot sell, right? These are equipment. And the demand side is actually coming from the carbon-intensive industry. For example, the steel, cement, petrochemical companies, the old buildings, shipping companies, and the aviation company. Now, they need to have a demand for renewable, right? And if the demand is there, then the supply can go up, along with the demand. Otherwise, it gets stuck, yeah? So that's what transition finance is doing. In fact, transition finance in China, we have now putting place a central bank taxonomy, which is now on the pilot usage by a lot of provinces. And many provinces then put out their own taxonomy. 20 plus provinces and cities have their own transition taxonomies. And now they're rolling out transition finance. But transition finance is not a passive way of receiving financing requests from a company. In fact, it's generating demand. Basically, the banks have to coach the companies in the carbon intensive sector saying, I'll tell you how to do transition plan, And you do a transition plan, I'll give you cheap money. And as a result, they generate demand. And that demand will translate into more demand for renewable energy, yeah, for the energy sector. I think that combination of demand and supply generation for renewable usage, I think is a key.
Thanks, Dr. Ma. This next question is for anyone. It's not directed to any specific panelist. So whoever feels that they have a opinion to express on this, yeah, please feel free to go ahead. So in Europe and the UK, central banks have resisted implementing subsidized green financing operations, mainly for two reasons. They view it as outside of their mandate. It should be the role of elected governments, not central banks. They also worry that this would be an inflationary or expansionary policy. So can these countries in the West learn from ASEAN plus 3 countries in terms of how they can have better coordination between their governments and central banks around common policy goals?
Yeah, perhaps I can start off. I think definitely they can, because what we're seeing in a lot of ASEAN plus 3 countries is a much more kind of collaborative approach to how these things are done. And I can pick on examples from many of the countries, but for example, in Philippines, they've put together a kind of network of the key stakeholders, including the Ministry of Finance and BSP, the central bank, as well as the securities regulator and so on. And the aim of that is really to discuss a lot of these key climate risk issues in a more holistic way, and so that policy is more informed. And similar things are happening, in Singapore, in China, as we've heard, in Hong Kong, Malaysia, Thailand, and so on. So I think from that perspective, I think that's something that would be a good thing to do. And just at the start of the question, in terms of the green financing policies, I mean, there are some of the recommendations we've made and some of the things already happening include green refinancing monetary operations. So those kind of policies are out there, which encourage, as I was saying, either cheaper or more subsidized financing for those kind of lending, which would then encourage more lending to those areas. But of course, as Dr. Marjan was making the point, we need to have some way to ensure the efficacy that these are actual green projects, to avoid greenwashing and all that sort of thing, which I think is one area that's severely lacking. So we do need to work on that, but I think the ideas are definitely out there and happening.
Thank you, Aziz. We have about 5 minutes left to the Q&A, so I kind of just want to wrap it up with my own question. Sorry to the members of the audience. Yeah, this is for everyone. If I could hear some concluding thoughts from every panelist on this. So I think the last how many months? The last 8-9 months have not been very positive on the climate front. We've seen a lot of developments in the United States. Pulling back on climate action, pulling out from the Paris Agreement. Corporates are winding back their net zero commitments. Where does this leave central banks in Asia? City, you mentioned just now that in Asia Pacific, there have been progress, phenomenal progress. Okay, maybe not phenomenal, but there have been significant progress made in these regions. By central banks in this region. Does this wider macroeconomic environment, triggered by the United States, do you think that it would have an impact on ongoing plans by ASEAN plus 3's central banks to kind of reform their financial regulatory environment towards the green transition? Yeah. Could I have thoughts from everyone on this? Thank you.
Yeah, if I can jump in first, we were here in Hong Kong hosting a lot of events in the Green Week. In fact, the first day of this week is the Hong Kong Green Finance Association annual meeting, which I chaired. And we were disrupted by typhoon in the morning, and that's why we switched to online. Of course, afternoon, we have a lot of people coming in. And at the end of the day, we heard that 300,000 people dialed in to the meeting. Yeah, it's a huge surprise. So there's a lot of interest and growing interest in green sustainable finance in this region. That's just one small indication, right? And also now give you the number which really shows actions. In Asia, the newly installed renewable capacity is 70% of global total. So we're not too concerned about, the US is not doing much or Europe is slowing down. This is where the action is in Asia. And just within Asia, we can generate a lot of new actions. For example, financing is available within Asia. In China, there's a lot of money. In fact, cheaper money than US dollar, right? It's 300 basis points lower in terms of policy rates. So a lot of Asian countries are actually financing their projects through issuing green bonds in mainland China, through the panda bond market in Hong Kong, through the CNH market. And we have technologies, right? China, Japan, Korea, they're great in terms of generating all these equipment. And we have huge demand in ASEAN countries. So just within this region, I think we should see a lot of optimism.
Laura, go ahead.
Thanks. Thanks, Janice. I'll keep it really short as well. I'm similarly hopeful for Asia Pacific. I mean, yes, global progress does feel a bit uncertain at the moment, but I think it just reinforces the message that Asia Pacific really has to and I think will carry this agenda forward for the next few years. I think it's particularly important that the region and especially the central banks have really shown that they're taking their own approach, developing their own methodologies and their own timing in making sure that the regulatory tools that they develop are fit for their local context and for their markets. And I think as long as they continue to do that, developing solutions that are credible, but that are also pragmatic and proportionate, I'll continue to be optimistic.
Thank you. Pak Heru?
Yes, thank you. I second Laura and Majun. I think we're still optimistic about that because the climate policy based on science, not from the heart. And we know that the natural-related disaster currently go up, the loss increasing all the time. And then for the transition, we have put a lot of effort to technology, to new product, and so on. And now some of the technology is here. For example, in China, electricity from solar panel is much higher than from nuclear. And then in Europe, the cost for generate electricity from solar panel is cheaper than from the coal. So this is one of the result of the research for years in this climate area. And some people still believe that, for example, carbon capture and storage technology currently is still expensive, but in the few years, in 10 years, maybe it will be cheaper. So it will help in the transition. So, and then the firm, if we see the data, I think most of the firms still on the track in the transition. This from me.
Siti and Aziz, do you want to, share your concluding thoughts on this?
Yeah, maybe just a little bit for me to add on of what has been mentioned. We've observed that the OCC of the US formally withdrew their climate guidance just a month ago, July, if I recall correctly. So this is quite big. So it's not just they're withdrawing from the NGFS, but they have formally withdrawn the only one climate framework they have. So formally now there's no climate guidance at all present at the US for the financial system, which is very much, like if we compare it to the Asia Pacific that we have been discussing today, is quite a setback. And like it or not, I think there might be some impact, like the reduced capital flows, or at least it will also impact the investor sentiment. But as Dr. Ma mentioned, we do have capital here too. So I also try to tend to be more optimistic on this issue. And I believe that because we have locally built a strong frameworks in Asia internally, I think we can continue driving this transition regardless of what happens abroad. And I think this is actually our opportunities to start, like collecting efforts regionally and to lead this transition within Asia. Thank you.
Yeah, I think that's a great kind of point by Siti Rizky, and kind of along the same lines as what I would say is I think we are, from a climate perspective, we're in a very dangerous position with the US stepping back, and it's going to either take two forms of action here in ASEAN +3 and kind of the rest of the world. One is to say, well, if they're stepping back, then why should we continue with all this? We don't need to do it, and then we kind of fall away as well. Or the other way to look at it, which is what I really want to promote, is to say, well, we are still being affected by this. We need to take action, and this is a chance for us to step up and shape the debate in a way that suits the region and maybe the global south in a more practical way, to still work towards a low carbon transition, but in a way that supports jobs and employment, and understands that it's not going to be a perfect solution, but we still need to work towards it, in what way we can. So thank you very much, Janice.
Yeah. Thanks, everyone. It was a very interesting discussion. We hope you members in the audience also had some insights, from the expert panelists as well. We'll end the session right now, and hope you have a good day ahead or a good evening ahead, depending on where you are, which part of the world you are. Thank you, everyone.